Live.
Good morning, everybody, and welcome to the Audit Committee on this lovely sunny day in St George's Day. So welcome. We'll go down the introductory ones first. I'm Councillor Benshaw from Alcyon Robin Hood and Leeds City Council. So welcome. Councillor Almas.
Thank you, Chair. Good morning, everybody. My name is Councillor Gower Almas from Leeds. Thank you.
Councillor Pervez.
No, there's no Councillor Pervez this morning.
Oh, that's Ian Hughes.
Thank you, Chair. Good morning, everyone. Ian Hughes from Calderdale Council, but here as Monitoring Officer for the West Yorkshire Fire and Rescue Authority.
John Roberts.
Thank you, Chair. John Roberts, I'm the Chief Fire Officer.
Councillor Hall.
Morning, David Hall from Kirklees Council in sunny Robert Town.
Councillor Fenton Glynn.
Councillor Josh Fenton Glynn, Labour Councillor for Calder Ward, Calderdale Council.
Dave Walton.
Morning, everyone. Dave Walton, I'm the Deputy Chief Fire Officer.
Alison Wood.
Good morning, I'm Alison Wood, Chief Finance and Procurement Officer.
Paul Hewitson.
Good morning, Councillor Paul Hewitson, Director from Deloitte, appointed Auditor to the Authority.
And Councillor Downs.
Hi, Councillor Rick Downs from Leeds.
Thank you. I think that's everyone. Have I missed anyone out? Is everyone in? Yep. Welcome. We'll go down the agenda first. Any apologies? Any apologies?
No apologies, Chair. No apologies.
Minutes of the last meeting. Can anybody propose that there is true record? I think I gave my apologies.
True record, Chair.
Thank you. Anybody second?
I second, Chair.
Thank you. Matters arising. Any matters arising? Have we any urgent items, Chair?
No urgent items.
Chair, talking to myself there. Thank you. No items require exclusion of the public or press. I don't think they do today. Anybody got any declarations of interest? Or silence? Next agenda item 6, the Internal Audit Quarterly Review. I think that's Alison and Simon.
Yes, thank you. Thank you, Chair. Good morning, everybody. I'm Simon Straker. I'm the Internal Audit Manager from Kirklees, and this item is our quarterly report for the final quarter of 2021, if I can say that correctly. So this is a summary of our work that we've completed during the final quarter of last year. And if I can bring you to page 13, I think it is in the pack of papers, you'll see that from page 13 to 17, we've given 5 opinions on various things that we've done, and happy to report that each of those has been a positive opinion. So I'll just run through those briefly, just to give you a flavour of what's happened. We completed 3 probity audits, I should say, during that time. We looked at income management, which has clearly been affected to some extent by the consequences of the pandemic, as some activities have been suspended and in some cases charges waived. But that's more than been offset by reductions in associated expenditure and grant from the government. So that was that. We looked at software licensing. We didn't find any evidence of unlicensed software being used, which was an important outcome. so the authority, as far as we can tell, is fully legally compliant from that point of view, because there is a risk of significant fine attached to any unlicensed usage. At the moment, or at least at the time of the audit, there was no proactive monitoring of software usage happening, so we can't be definitive that everything that the authority is paying for is actually being used, especially as expenditure in this area isn't identified separately in the ledger. But having said that, we didn't find any evidence that that was the case. And thirdly, we looked at the National Fraud Initiative outcome, which, as members may be aware, is the biennial data matching exercise across the country, led by the Cabinet Office, and the authority submits its payroll and creditor payments data. And as had been the case in previous years, there were no particular items to report, so a clean bill of health there, really. And then secondly, we looked at 2 risk audit areas, which was firstly the risks of exposure from third-party health and safety issues, primarily contractors working on and for the authority. Pleased to report good progress in managing this risk. Use of software to record and monitor contractors' performance and arrangements is being put into operation. Needs developing and refining a little, but heading in the right direction. And then finally, the risk around abuse and attacks on staff, where I'm sure we all agree one incident would be one incident too many, but encouragingly, the risk is being well managed as far as possible, and I think that's reflected in the reduced number of incidents being reported and recorded, and I'm sure we all hope that that will be sustained in more normal times. And we noted that successful prosecutions have begun to be initiated under the new legislation for attacks on emergency workers. So to summarise, you may recall we had a revised plan which committee approved during last summer. Of that, of those 15 audits, we've done 10. 4 are still in progress, which we'll report at the next meeting, and one's been carried forward into the 21-22 plan, which is also on the agenda later on. I'll say a little bit more when we come to the item on the annual report, which I think is item 9. So if that's the position, Chair. Happy to answer any questions or queries that members or anybody else may have.
Thank you for that, Simon. I'm just pleased that there's 5 audits being positive, so thank you very much. Has anybody got any questions? Councillor Hall?
Thank you, Chair. Just on the audit of third-party health and safety exposure, have we got maybe an update from management about how we're progressing with that to try and make sure that the audit is better next time?
Is that for Simon? Would you like to answer?
Well, from our audit viewpoint, you say better next time, Councillor. Clearly, it was still a positive opinion. Things still to do around the software monitoring. We have agreed an action plan with management colleagues. I don't know if Dave or anybody else would like to add their thoughts at that point.
I think Dave Walton would like to come in now. Is that?
Yeah, thank you. Through you, Chair. It's actually Nick's area of responsibility, and I know he's not present for this meeting, but in the most general terms, given that most of this audit refers to contract arrangements through property, etc., members will be aware there's been quite a substantial review of the property management unit ongoing at the moment, which, amongst many other things, is looking at this area of work as well. So yes, I think give some positive assurance that progress has been made on this one.
Is that okay for you, Councillor Hall?
Yeah, thank you, Chair. Thank you.
Thank you. I think it was Alison that was going to the, well, I think you've sent the figures, Alison, of the authorities required to absorb losses of up to 5%. So we're only getting 7 of its planned 2021 sales fees charges on page 13. And the government were compensating 75 pence in every pound. Could you just give me the figures again of that shortfall?
Yeah, so yeah, sure, I can do that. So the income that we actually lost due to COVID-19, so that was external training courses, fire activation calls, we suspended that for a period during last year, and also youth intervention courses. The first set of courses had to be cancelled. So you're correct, as you know, the government actually gave us a process where we could actually claim 75 pence in every pound. So the total amount of income lost due to those 3 areas was 188,000, for which we've actually claimed back 141,000. So any shortfall that we could actually take from the COVID grant, which is over £1 million remaining.
Thank you for that, Alison.
Yeah.
Anybody else got any questions? No? Thank you very much for that. And I just think it's quite positive moving forward, especially with all the COVID situations that you've had to deal with as well, Simon. So, well, thank you.
Thank you, Chair.
Item 7. Can I ask John to give the report on on item 7, agenda item 7, please?
Thank you, Chair. That's myself, Alison Davey, if I can present that report.
All right, thank you, Alice.
Okay, so this is to report on the risk management activity and developments that have been reported through to the risk management strategy group. The last meeting of the group was in March this year. At section 2.2 of the report, it highlights the key areas that were discussed at that meeting. So between December 2020 and March 2021, 22 risks on the matrix have been reviewed by their respective owners. The risk, ineffective response and recovery to the coronavirus pandemic is reviewed every 3 months, and the current score for that risk is at 12. The risk GDPR failure to implement the requirements of the General Data Protection Regulation by 25th of May 2018 has now been removed from our risk matrix. We had an audit in May 2018 regarding the arrangements that we had in place for that, but we decided that we would leave it on the matrix and review to ensure that all of those arrangements were fully embedded. So the audit that we had in May 2018, we got substantial assurance, and in January this year, we've had another audit against that regarding data protection and GDPR, and again we have substantial assurance. So we're confident that the arrangements that we have in place are suitable, so we've taken that one off our risk register. The risk management strategy and policy is currently being reviewed, and it has gone to our risk management strategy group, and we will be submitting that through to the next audit committee for members' approval. There are currently 53 risks on our risk management matrix, and those are detailed in the table on point 2.3, whether they're high risk, very high risk, medium or low risk. So they're detailed there. And we've also detailed all of the very high risks within the report as well. So this is just to give members an update on the arrangements that were discussed at the last meeting. So happy to take any questions.
Can I just say straight away that I'm pleased to see that the GPDR has been completed and now taken off the matrix. I'm just wondering if incorporated within the high risks, where it's the wide area of flooding and the water rescue, whether there's climate emergency could be linked into that. I just wondered if there's any possibility, because that's obviously high on the agenda in most areas now. Dave?
Yeah, if I may, through you, Chair. Obviously, the climate emergency and subsequent effects of it are something that would lead to wide area flooding. So the actual risk we're managing is the impact of it. As a sort of ethically responsible service, we will, of course, take whatever measures we can internally to support our carbon footprint, for example. For that specifically refer to things like emissions on vehicles, etc. And also you'll see from much of our campaigning that we campaign around the risk of wildfires and safe behaviours, dealing with some of the consequential effects. So yes, it's certainly very high on our radar, but the risk actually deals with the consequence of it. And that's what we manage most directly in response to that risk.
Thank you. Thank you, Dave. Does anybody else have any questions on agenda item 7? Everybody's sitting quiet this morning. Must be the sunshine. We'll move on to agenda item 8, and I think that's Alison Wood, is it?
Yeah, thank you. So this is presenting the accounting policies that the team will use to actually close the statement of accounts. So it's considered good practice that audit committee sees the accounting policies that will be applied. So one key change in this year is that the date for the publication of the audit accounts has been moved from the 31st of July to the 30th of September, which means is the actual inspection date has moved back for the actual preparation of the accounts from the 31st of May to the 31st of July. We'd like to reassure members the team's still working to the original deadline of the 31st of May so the team can carry on doing budget monitoring and other areas of work. So 2.4, there's been no changes to accounting policies from those that we used in the previous years. The changes to IFRS 16, which were due to be implemented from the last financial year, have been postponed for another year until April 22. So the actual policies are detailed in Appendix A, and I'm happy to take any questions.
Any members, any questions for that? Thank you, Alison. Anybody, any questions? No, it seems if they're all happy with that, Alison, thank you.
Thank you.
And we'll now go to the internal audit, which is Simon, I think, again. Back to Simon.
Yes, thank you, Chair. This item is around our annual report for 2020-21, which nearly tripped me up again. This is really a summary and reiteration of updates in our quarterly reports that you've received during the year. And the 3 areas draw your attention to. Firstly, we're asking members to endorse the positive conclusion about the authority's system of internal audit and control, which we've described on pages 41 and 42, really. And this is an area that's required from the audit and accounting regs. I suppose I should say, really, it has been a difficult year. Clearly, it's been a difficult year for almost everybody. And whilst that's been the case, we think we have garnered a sufficient body of evidence to produce our annual opinion. There was some concern, I think, at the start of the year whether that would be the case, but I think we have. Yet we have recognised that from really the end of 1920 onwards, we haven't been able to deliver the full SLA. Unfortunately, audit staff have been working on other things, primarily grants administration in Kirklees and some other corporate priorities for the council. So in recognition of that, we've recently refunded 80 days worth of the SLA, and that equates to roughly £25,000. So hopefully going forward, and I'm confident that we can go back to delivering the full SLA, and we'll come on to that in our plan for 21-22 in yet another item. That having been said, I'd ask members then to note the fact that we have produced and come to the conclusion of a positive opinion about 3 things, about the authority's risk management arrangements, and we've just heard from Alison in a previous item an update about that. I think it's perhaps important to note that there was a concern previously arising from an audit about the recording of training and professional training and other mandatory training and the management information arising from that, but a follow-up audit that we've done during this year has satisfied ourselves that the revised arrangements and a new in-house piece of software has addressed those issues so that we can, I think, give a positive opinion about the risk management arrangements, also about the governance arrangements of the authority, and thirdly about the internal control environment generally, based on the mix of work that we've done, both probity and risk-based. And really those items are summarised on pages 43 and 44 in accordance with our professional standards. And thirdly, in accordance with good practice and those standards, I'd ask members to reapprove effectively the audit charter and strategy that is included as the appendix to the report. No changes are necessary from my viewpoint, as it's still fit for purpose, but it is good practice to review and reapprove the document annually. So that's where we are with the annual report. Again, members, if there are any questions, Chair, if there are any questions or comments, happy to come back.
Thank you, Simon. Has anybody any questions? No? Can I ask if everyone's in agreement to approve those minutes of the agenda?
Move them, Chair.
Thank you. Thank you very much, Simon. That seems to be okay with everyone. So thank you, and thank you for the good work that's been carried out during the COVID pandemic anyway. So I know it's all been ups and downs for everybody, so thank you.
Yes, I'll pass those comments on to the team. Thank you, Chair.
Thank you. Please do. Agenda item 10, annual governance statement 2021, from Alison Wood.
Yeah, so that's my chair. So I'm presenting to members the annual governance statement 2021. So I require members to approve the report. However, this is still a live document until the audit has been completed, so it is still subject to change, which I'll bring back to committee in July. So there is two main changes. It takes the same format as in previous years, obviously updated for information for 2021. But there's two new additions in the report in the annual governance statement this year. The first one is around the adoption of the Financial Management Code. So this is to promote financial sustainability within local authorities, for which we will be actually implementing that this year. And also there's a requirement for Deloitte to actually provide an additional value for money conclusion, which I'm sure Paul will go through in his later report. So the actual annual governance statement is actually split into 5 sections. The final section is significant governance issues, albeit they're not very, don't cause me any concern. Certainly we need to identify those. So the significant governance issues for 2021. The first one is the election of the auctioneer, which occurs in May this year. So I'm sure you're aware that the Mayor is going to take over the office of the PCC. We're unsure about any governance implications for West Yorkshire Fire. There's also reforms to Fire and Rescue Service. So the HMICFRS in the State of Fire reports published in January 20 and March this year made six recommendations which could have governance issues. There's also changes to the monitoring officer provision, which we've now procured through an SLA with Calderdale Council. This is a change in provision from what we've had before, so it's something that we need to be aware of. And finally, the actual performance management system implementation. So the actual framework is up and running. We're in the process now of implementing a system which will actually record KPIs, which will allow us to actually monitor our performance and aid decision making. So that's worthy of note also. In addition, there's 3 governance issues that are still outstanding from the previous year. So the first one is regarding central government funding uncertainty. So we were expecting a comprehensive spending review last year. As you know, that was postponed, so there's a new review in summer 21. Also, the implications of the Master Court ruling justice regarding on-call firefighters, and also the requirement to collaborate regarding the Police and Crime Act. So happy to take any questions on those.
Anybody got any questions for Alison? I'm just pleased to see that the gender pay gap is being addressed as part of the governance, and also becoming a more inclusive and diverse service. So I'm pleased to see that that is now being incorporated into that. Has anybody else got any questions? No? We'll move on to agenda item 11, internal audit plan then 2021 to 22. This
Chair.
is back to Simon.
Chair. Just
Oh,
before
sorry.
you move on, can we just ensure that we capture that the authority approves it?
Is everybody happy that the authority
Can we move-
approves it?
I'll move that report, Chair.
Thank you.
Thank you, Chair.
Thank you, Councillor Tully. Sorry about that, John. Internal audit plan 2021 to 22, Simon, this time.
Yes, thank you, Chair. Me again. As is normal, we bring the proposed audit plan to committee for approval. As we normally do, this is an extraction of audits that now fall due from our strategic plan, and noting priorities of work deferred over the last 18 months or so, as I previously alluded to, really. It follows consultation with Alison, with Management Board as a whole, and with the Risk Management Strategy Group that the Deputy Chief Officer chairs. So on page 83 of the pack, there's a schedule of proposed work, which is really a reflection of a mixture of probity and risk-based audits, I think covering a good range of topics and issues facing the authority. If I can just find it, I'll briefly run through it just to summarise. You'll see that there are a number of pieces of work that are effectively brought forward from last year when it was necessary to revise the original audit plan from last year. The stores audit, it was in fact deferred from 1920 at management's request due to a change in procedures and arrangements. So they to give them time to embed. There were almost five areas of risk that were effectively sidelined in the revised plan. Perhaps important to note, particularly the final one. I think Alison is quite keen for us to review the arrangements for contract procedure rule compliance, in line with the changes from the procurement arrangements and the purchasing strategy, how well embedded they have become. Then I mentioned previously there was one audit brought forward from the revised plan, which is around respiratory protective equipment. And then you'll see at the bottom there are a series of probity audits that now fall due. Payroll, treasury management, which the authorities are taking responsibility or will take responsibility for shortly from Kirklees, bank reconciliation, and we've been particularly asked to look at the implementation of the HR and rostering system too. That's where we've got to. Hopefully members will feel that's a good range of issues and draw assurance from the work that we're going to do on those if committee could approve that. Thank you, Chair.
Has anybody got any questions? Councillor Hall.
Thank you, Chair. It's something I did raise before, but I'll just raise it again because I saw a little nugget of info that supports what I was saying, which is about the amount of time that we spend on internal audit looking at risk. And according to this on page 82, practically all the authorities' auditable risks will have been looked at. Do we have like a 3-year or plan or something like that, which has the risks on and what comes up when, or do we need to be reviewing the risks on such a regular basis? In other words, do we need such a size of internal audit function, or can the internal audit look at other things? Just a comment, really. I don't know if anybody can reply to that.
Yes, thank you, Councillor Hall. You'll have realised that we do need to do some work in risk management areas because we have to give an annual opinion. That's one of the key things that we have to give an annual opinion about, which colleagues from external audit to presumably draw some assurance about. In the audit strategy for a number of years, we've worked on the premise now that about half the audit plan will be spent doing those sorts of things. There is no particular hard and fast rule how we should dedicate our time. We clearly need to do some probity auditing around the key financial systems and risks. We do have a 3-year strategic plan from which we extrapolate audits that are due in any 1 year and work forward from that. It's an interesting area. I think possibly going forward it might be worth a paper and consideration at a future meeting about are we spent or how we spend internal audit time, and are we looking at the most relevant areas. We've been, as I say, we've been doing this for a number of years now. It may be time to review that. I suppose clearly risks and the incidence of them happening vary over time, and new risks come onto the matrix that we haven't looked at previously, and ones that we have fall off. For example, the data protection one. So. It's not necessarily looking at the same thing all the time on a rolling program, but it's true to say there is an element of that, and it may be something that in conjunction with management board we want to consider perhaps later in the year for the next year's plan. I don't know if anybody else has any thoughts on that particularly.
Thank you, Chair. Thank you, David, and thank you, Simon. Anybody else any questions? Can I just say, I think it's useful to have a check just to give that reassurance to members and also the public of the transparency and everything that goes within audit. So I welcome some of the things that are on there on a regular basis. Can I ask somebody to propose or second that, please?
Chair, can I? The content of the report and that we improve the internal audit plan for 2021.
Yeah. Thank you, Councillor Tully.
Happy to second.
Thank you, Councillor Fenton-Glenn. Can't get Steve. Can't get you off the screen now, Steve. And now it's the external audit from Deloitte. So can I welcome Paul and say, would you like to take us through your report?
Certainly, Chair. Thank you very much. At least I would if my computer would just cooperate for a second. There we go. Right. So what the committee has in front of them here is our annual audit plan. For those of you who are old hands at this, it will appear very familiar because it follows a set format. This is the third one that we brought to you. And therefore, I will take this at pace and assume it has been read. I will just pick out the key matters that the audit committee either need to consider or opine upon. So page 3 of our report, which is 87 of the pack, just gives you the introduction, confirms the audit scope, and highlights the value for money changes, which Alison alluded to and which I will come on to in more detail later in the document. I'm going to take you past page 4 of our document, which is just an overview of your responsibilities and how we think we fit into that. Page 5 is an overview of the audit timetable and process, just to give you clarity over what it is, what the various steps are within the audit. Taking you to page 6, I will dwell upon this one ever so slightly. So we have 4 key areas of responsibility. And the first one, the most obvious one, is to give an opinion on the financial statements. So that is where we tick and test and challenge and review the financial statements, and we give you our audit opinion. I believe some guidance has just been finalised recently that suggests that the format of the audit opinion will change. Previously, it's been an enhanced audit report with lots of detail in it. I believe that is changing for the current year, but we will obviously share a draft of the opinion with the committee in due course, so you can see what it says and what we're telling you. The annual governance statement, which the committee considered a couple of agenda items ago, and as Alison said, that is not finalised until the audit is concluded. We're required to review it to make sure it is consistent with everything we know about the organisation, also that it complies with the requirements, that it includes everything that it is supposed to include. Whole of government accounts. This is the process through which the financial statements of all local authorities are consolidated up to give an overall picture of the financial performance of UK government. We do not expect to be within scope for the whole of government accounts because they strip out the impact of pensions. And once you take that out, then you are sufficiently small that the National Audit Office doesn't really mind what your numbers are as long as they're consistent with the financial statements. And then the value for money conclusion. Now, as Alison mentioned earlier, the work around this is changing significantly this year. So members may recall in the past that the value for money conclusion was a paragraph at the bottom of our opinion that gave you a binary, either yes, everything is fine, or at least we have nothing to report, not even that everything is fine, we have nothing to report and we are satisfied, or that we've identified weaknesses. The reporting this year takes a different form. So what we have to do this year is we still have to report if there are any significant weaknesses, and that would find its way into our reporting. But the rump of the work forms a longer narrative judgment that we have to form, where we set out what is good, what is bad, what is interesting, what is routine, in a longer narrative document. Now, the timetable for that is that has to follow within 3 months of the audit opinion. So it doesn't have to come at the same time as the audit opinion, but it must follow within 3 months. This is new work, new scope of work that was confirmed by the National Audit Office at the turn of the year. Probably not for minuting, but I think there is a feeling within the audit profession that this was not the best year to introduce it, given everything else that we're dealing with, but they have pushed ahead with it, and that's what we have to do. So we have begun that work, and we've shared our information gathering template with the finance team, and we look forward to receiving that back in due course and being able to review it and start to form our narrative judgment. Taking you forward through our document then, page 7 just gives you an overview of our approach, which I will take you past. Page 8 gives you a high-level timetable. So just to reiterate what Alison already confirmed, that the timetable has been adjusted. So the deadline for the issuance of the audit opinion is the 30th of September, and I believe we are booked in to come and do your audit in July. So the first slide of actual interest is slide 9 of our document, page 93 of the pack, and that's where we talk about materiality. Just as a quick recap for those of you who either don't recall or are new to the committee, materiality is a benchmark that we establish that, in my judgment, if an error was bigger than that number, it would be important to the user of the accounts and would need changing. If it's below that number and it doesn't have other reasons to be interesting, then we judge that it isn't material and the accounts could still be construed to present a true and fair view of the financial position of the authority. So it is an important judgment, and it does drive how much work we do and where we do that work. So I've estimated that your materiality for the current year will be about £1.8 million. We do revisit that once we've got the financial statements, the draft financial statements, and for context, last year's was £2.1 million. So you're in the same ballpark. The reason it jumps around tends to be because you have big pension numbers that come in towards the end of the year, and can drag the numbers about a little bit. The more important piece that I require the committee to opine upon is the clearly trivial threshold. So you'll see on the second column there, we've identified a clearly trivial threshold for which we will report to you of £90,000. So what that means is, if I find an error in excess of £90,000 that isn't corrected, then I will report it to the audit committee. If I find one below £90,000, I will tell the finance team, but I wouldn't necessarily bring it to the attention of the audit committee, because obviously your role is to focus on the big ticket items and the stuff that is really important and really critical. Now, I always like to emphasize that context comes into this. And apologies, Alison, I always pick on the Director of Finance. If I was to find that Alison had paid herself an extra £85,000, even though that's below the £90,000, I would still tell you about it. So I always consider context as well as the value of the error. But as a rule of thumb, we wouldn't report anything to you below £90,000 individually. Now, you can vary that threshold downwards if you wish, but just be aware that if you vary it downwards, you will get more issues being reported in your final report to those charged with governance. So to really contrive an example, if you set that at 0, I would have to tell you if your accounts were out by £1, which in the context of a multi-million pound organisation clearly is not the right answer. But I do need the committee to either request a different number or to endorse that reporting threshold. And as you can see, I've included last year's threshold at £106,000. As a rule of thumb, it's 5% materiality. We judge that if it's 5% materiality, it's probably not quite interesting enough to report to you. What would you like the committee to consider that now, Chair, or would you prefer to come back to that at the end?
I think Councillor Fenton Glynn's got a question. If you'd like to take questions now.
Yes, I'm very happy to take questions.
Mine was really more of an endorsement. I think that sounds like a reasonable level, particularly bearing in mind the context that obviously if you saw the egregious problem, you would point it out to us. I think if we can feel confident in both that 5% is perfectly proportionate, and secondly that you would point out any egregious example discovered, I think is perfectly reasonable. So I would endorse that, and I move that the committee does.
Right, thank you. Councillor Hall?
Yes, I'd be very happy to second that, Chair. I was just going to make a point really on the same thing, that even though an error less than £90,000 may not be reported directly to the audit committee, presumably every error less than that is reported somewhere so that it can be picked up.
Yes, the auditing standard requires that we bring all errors to the attention of a relevant level of management. So if it was, if it was pennies, or it was a reconciliation was out by a couple of pounds, we'd tell the person who gave us the information. So look, your reconciliation's out by a few pounds, just get it right next time. If it was into the tens of thousands, we'd probably report it to James Buttery and say, look, we found this, we don't think it's a problem, but you need to know about it. If it was really knocking on the door of £90,000, I may well flag it up to Alison directly. If it was a fine decision as to whether it should or should not be included, then I would take a proportionate approach. It's also worth pointing out that if we found an issue that arose from a control deficiency, but it gave rise to a trivial error, that wouldn't preclude me from reporting the control recommendation to you. So even if a control recommendation gave rise to a trivial error, I would still consider whether it was relevant to those charged with governance.
Thank you. Is that okay, Councillor Hall? Anybody else any questions before Paul continues with his report? Would you like to carry on with the rest of the report, Paul? Thank you.
So I'm going to take you past the COVID-19 pandemic, its effect on its audit. That's just given for your information so that you know how we are considering and responding. I'm going to take you through the significant risk assessment slide, which is page 96 of your pack and page 12 of my report, to the dashboard on page 13. So this is where we set out the significant risks of material misstatement. And what these are the areas that I believe are most likely to give rise to a material error, and therefore the areas where we do proportionately more work than we would otherwise do. And we have 3 here, and they are the same 3 that we had in previous years, and they are valuation of properties. And the reason we include valuation of properties is because the numbers are big, they are inherently judgmental, and small changes in estimation and judgment can result in big numbers in the financial statements. As anybody who has bought or sold a house knows, if you get 2 valuers together, they'll each give you 2 different numbers. You know, it's an art rather than a science. So what we do is we look at what you have done to review and challenge those valuations. And then we get our valuations team to examine that methodology and make sure that it seems fair and reasonable and appropriate and likely to give rise to a materially correct valuation. And then we track the values all the way through the financial statements to make sure that they're all where they should be and presented in the correct manner. The next one is completeness of expenditure. Now, this one does bear a little explanation. The auditing standards require me to assume that there is a risk of fraudulent manipulation in the revenue cycle. And for the purposes of this test, revenue is anything that flows through the P&L account. So in your parlance, it's revenue rather than capital, which is the usual distinction that local authorities will draw. Where we focus this in on this year is around the cutoff of your expenditure. And the reason that we don't look to revenue is if you look at your revenue, your actual revenue, as opposed to grant income, as opposed to revenue support grants and things like that, you don't have a lot of it. And what you do have is relatively straightforward and relatively small. So where we judge there is a risk is in the late cutoff or the early cutoff of expenditure. So if to contrive an example, and please, Alison, don't leap in and say you definitely don't have anyone that does this. I'm just trying to illustrate. If you had an budget holder who was looking at their budget and going, oh, hell, I'm going to overspend this year. But if I just don't own up to the fact that I've committed some expenditure, I can push that expenditure into next year when I've got a whole year to fix it, and I look like I've come in budget this year. So fraudulently, that cut-off position is manipulated to flatter the financial position of the authority. That's the picture that I'm painting here. So what we do is we look at the cut-off procedures and the controls around making sure that expenditure ends up in the correct year account. And we do that by looking at expenditures incurred in the new year, both in terms of defrayed payments and invoices that are recognised, and check when they should have been recognised. Should it have been in the next year? Should it have been the current year? And is that what you actually did? This has been our risk for the last couple of years. We have found some control improvements in previous years. We are assured these improvements have been reflected. We've retained the risk where it is this year so we can see how that plays out. If the controls work as intended and as described and we don't find any issues, I think I will revisit the assessment of this significant risk of future years' audits. But for the current year, in light of what we found last year, in light of the control issues we have identified, that is where I judge it to be most relevant to fix our significant risk of fraudulent misstatement in the revenue cycle. But I always like to emphasize I have no evidence of fraud. I'm just required to presume that there is a risk of fraud. The third risk, on there is the management override of controls. And this again is a fraud risk, and it is focused on the fact that management, and for management you may read Alison and the executive tier here, that occupies such a dominant position in your control environment that simply through the exertion of influence or through the selection of assumptions and making of judgments, they could fraudulently manipulate the reported financial position. And so what we, excuse me, I'm going to sneeze. Nope, it's gone. So what we're required to do is to assume that that risk exists and then design procedures to address it. And typically what that means is we will look at your big estimates and your big judgments, and we will determine whether or not it looks like they're all pushing you in the same direction, and whether on historic evidence you seem to be making balanced decisions. And we will test journals, because that is the principal way in which management could impact the financial statements and bypass all of the controls that internal audit have just given you a great positive opinion on. So we use our audit software to profile the journals and make sure that we are picking ones that exhibit characteristics of fraud. So things like, was it a round number? Was it posted at a weekend? Was it posted on a bank holiday? Was it posted by a user that doesn't post many journals in the year? Things like that are the characteristics that we go looking for. But again, I'd like to emphasize this point. I have no evidence or suspicions that management are perpetrating fraud. I'm merely required to presume that that is the case. My ask of the committee for these three risks is, do you concur that they seem a sensible suite of significant risks? And are there any other areas of significant risk of material misstatement that you believe I need to be incorporating in my audit in order to form a true and fair opinion? So firstly, do you acknowledge and recognize those three risks? And secondly, do you believe I have missed any risks? So committee members, please.
Has anybody got any questions? Or has anybody got any concerns? Councillor Hall?
I would have thought, Chair, that these are a good set of considerations. There, I can't think of anything myself that I would want to put in that other than those. So I'd be happy to go with those recommendations, Chair.
I'm just thinking, because those sorts of recommendations really apply to any business or authority or anybody dealing with finance. It's not just the fire authority. So,
absolutely,
it's not just as if it's this authority that's
no.
those to consider. It is generally and nationally. So I'm just wondering if anybody else has got any questions they'd like to ask, or could I ask if everyone's in agreement with that?
Second that course of action, Chair.
Thank you, Councillor Tully.
Okay.
Okay.
Thanks, Chair. Shall I continue? I'm almost done, I promise.
Yeah.
So the next slide is slide 17, which talks about the value for money. I've already spoken about this, so I won't go into any further detail on that. Slide 18 talks about a revised auditing standard around going concern, which we've included because it is a new auditing standard. We are required to consider it, but actually practice note 10 deals more explicitly with going concern in a public sector context. And therefore, if you do, through your other roles, hear about ISA 570 going concern, just give you assurance that I'm alert to it. We do incorporate it, but actually for you in this context, practice note 10 is a more relevant source of guidance, which basically says that so long as your service continues, you are a going concern. And as far as I'm aware, people are always going to need their fires putting out and people rescuing, and therefore your service is going to continue. So that skips us all the way through to page 22, which just sets out a responsibility statement just to confirm what we do and don't report on. Take you through to page 24, which has got last year's uncorrected misstatements in. And the reason that we include these is that some of them will have a rollover affecting the current year. And therefore we will consider, in the same way you can see we had in the top line there, misstatements identified in the prior year affecting the current year. These will collapse down into a similar line for the current year's audit. And so it's just to remind you that's what we found. Page 25 and 26 merely reconfirms our responsibilities in respect of fraud and what you can expect from us. Page 27 confirms that we are independent, and that I always like to re-emphasize that I've done the necessary checks. I am still independent, my team is still independent, Deloitte are still independent of the authority, and therefore we are able to give you an independent auditor's report. Page 28 is the independence and fees slide. So on the fees, as I've outlined, there has been a significant change in the scope of the work around value for money. And so we are in discussion with Alison around a proportionate level of fee for the current year. And we will monitor how much time that actually takes, because it is a big unknown, and then we'll agree a fee at the end of the process. I'd like to think that I'd be able to report back something more substantial, or at least tangible, in our report to those charged with governance as to where we thought we were going to land on that, based on either experience here or experience elsewhere. And then finally, page 29 just gives you a bit of comfort that we are cognizant of the continuing emphasis on audit quality, and just to demonstrate, give you a link to the AQR report, who are the team that audit the auditors, and tell us, mark our work and tell us where we can do better and where we've done well. And that is a publicly available report that anybody can pull down and have a look at. And that's me done, Chair.
Thank you, Paul, for that. I think that's been very thorough. But I just wondered if anybody, Councillor Hall, again.
Just a comment, really, Chair, on value for money. I think this is a good step to have a narrative rather than a kind of a binary choice. Is it value for money or isn't it? I've always felt that because that judgment is so subjective. I mean, for instance, if you bought a chair for £100 and you thought, oh, that's value for money, and then you bought another one exactly the same for £120, is that value for money or is it not? Compared, whatever you go at in this kind of thing, you always end up with a bit of a subjective, well, is it or isn't it? And I think a narrative, it would be much better the way to go. So I welcome that.
Thank you, Councillor Hall.
Absolutely, Councillor. To my mind, the problem with the old regime was it set a very high bar that you had to be catastrophically failing before an audit would go, I'm sorry, you have a significant weakness in your delivery value for money. And that meant that you didn't necessarily get visibility of things that were bubbling up. Whereas this approach gives us a vehicle through which we can say, well, this isn't great. It's not a problem, but it's not great. And you want to give it some attention before it becomes a problem. So I think it is a positive step.
Has any of the members got any questions to ask on this item? Are we all in agreement with Deloitte's reports? Can I ask for somebody to
move the report, Chair?
Thank you, Councillor Tully.
I'm happy to second.
Thank you, Councillor Fenton-Glynn. Right, thank you very much for that. I think that concludes the audit meeting. And can I say thank you very much to everybody. Thanks for the reports and the questions. And all have a nice St. George's Day, celebrate St. George's Day today and enjoy the sunshine. So thank you very much to everyone.